unsteady stock market, it may cause uncertainty for you when considering investing. Joining me is Tim Courtney, Chief Investment Officer with Burns Advisory Group. Thank you so much for joining me.
Yeah, thanks for having me.
Of course, of course. Now, when the stock market is hurting, the initial reaction is maybe fear and panic. But what do you advise?
Well, a couple things. First, if you are a long-term investor, which if you're going to invest your cash, you should be a long-term investor. You should have set aside money in more short-term conservative investments like cash, bonds, so that when times like this happen, you're not forced to sell stocks at the wrong time. That's probably one of the fastest ways that people deplete their capital over time, is being forced to sell stocks at low prices. So having money set aside in cash and bonds allows you to ride out these time frames. But also, really for people who are working and saving money, these are probably some of the best opportunities you'll have to accumulate capital over time. Because the stocks are right now selling at about 20% what they were a couple months ago. It's like walking into the store and getting 20% off sale.
Nice.
So you can accumulate more assets as long as you have money to save and to invest. So it is an opportunity for people who have those savings to create better wealth for them over time.
Wow. So if some people are pulling their stocks out because of the panic, that they're a little bit nervous,
right,
that is an open door for you.
Yeah, that's right.
Wow.
And one thing that people forget during these panics is that for every sell that's happening, there's a buyer on the other end.
Wow.
So as people are rushing to sell, there are people who have cash and capital who are more than willing to buy those shares up from the sellers. So when these market displacements happen and you have market pullbacks, the expected return for the stock market actually is higher during these times. So a couple months ago, we might have expected, say, over the next decade, that stocks were, say, 9%. Well, with this pullback, we have a higher expected return for the market going forward. So it's an opportunity to have higher expected returns.
Very nice. So what should people be investing in now?
Well, assets that produce wealth is what people should be buying always, and certainly now. There are a lot of people who feel like assets should be moving into cash. And the problem with cash and more conservative investments like bonds and putting too much money there is that they pay very little, if any, interest. 1, 2, 3%. Another thing that people think is a good idea today is to invest in gold. And we don't have a problem with investing small amounts in gold, but gold is what we call an asset that has no investment quality to it. It's purely speculative. So it's not like oil or food, a commodity that's used. It's simply worth what somebody else is willing to pay for it.
Wow.
And gold over time does do a fairly good job of tracking inflation. But lately, gold has gone up so far, so fast, that inflation, for them to equal out, inflation would have to be about 10% a year for the next 2 decades, while gold stands still for those two to basically meet. So gold is something more speculative. It's not truly an investment. Stocks really are something that is an investment. They're buying equities and ownership positions in companies that provide goods and services that everybody needs and uses multiple times a day. And they typically do outpace inflation over long periods of time.
Great information. Obviously, if people are curious and they want some advice on investing and all of that, I'm sure the Burns Advisory Group is a great source for them. What is your website if people want more information?
Yeah, it's www.burnsag.com for Burns Advisory Group.
Great. Perfect. Thank you so much.
Yeah, thank you.